I'm going to try and explain everything you absolutely need to know about index funds right now. Index funds are one of the simplest, most effective, and accessible ways to invest your money. They've become incredibly popular over the years, and for good reason. By understanding index funds, you can set yourself up for long-term financial success. Many people feel overwhelmed when it comes to investing. They're worried about making the wrong choices, losing money, or not having enough time to manage their investments. The complexity of the financial markets can be daunting. There are so many options available, and it can be hard to know where to start. High fees associated with active management can eat into your returns, reducing the amount of money you have available to invest. These fees can add up quickly, and they can have a significant impact on your overall investment performance. Another challenge people face is the time commitment required for active management. It takes a lot of time and effort to research, monitor, and adjust your investments. For many people, this just isn't feasible. Some people might think that investing requires a lot of money or a deep understanding of the markets. But the truth is, anyone can start investing, even with a small amount of money. Index funds are a type of investment that tracks a specific market index, like the S&P 500. They work by pooling money from many investors to buy a small piece of each company in that index. This provides instant diversification, which can help reduce risk. One of the biggest benefits of index funds is their low fees. Since they don't require active management, the costs are much lower compared to other investment options. Index funds are also a passive investment, meaning you don't need to worry about buying and selling individual stocks. You can just invest and hold onto your fund for the long term. For example, an S&P 500 index fund would invest in the 500 largest companies in the U.S., providing broad exposure to the U.S. market. Another example is a total stock market index fund, which would invest in virtually all publicly traded U.S. companies. Understanding index funds is especially important right now. With current market trends and inflation, it's more crucial than ever to have a solid investment strategy in place. The good news is that it's easier than ever to get started with index funds. Many brokerages offer low-cost index fund options, and some even offer fractional shares, making it possible to invest with smaller amounts of money. Index funds have a proven track record of delivering long-term growth. By investing in a diversified portfolio of stocks, you can potentially earn higher returns over the long term. The current economic climate makes index funds an attractive option for many investors. With their low fees and passive management, they can provide a sense of security and stability. To recap, index funds offer a simple, effective, and accessible way to invest your money. They provide diversification, low fees, and passive management, making them an attractive option for anyone looking to build wealth. If you have any questions about index funds or investing in general, leave a comment below and I'll do my best to help. Don't forget to subscribe to my channel for more financial tips and tricks. If you want to learn more about building a diversified portfolio, check out my other video on that topic, linked below.